except for that ABCD pattern. Good afternoon, James. Twitter, that's good. Alright, so let's start. Let's see how many trades we have there. I think I'll be able to review 2 for each one, hopefully. Members are still coming, so I think we'll have more trades there. Let's do it 1 for now, okay guys? For each member, if we have time, I'll go back up again and I'll take the second trade for everyone as well, just in case. So Ivan, you traded AAL, not bad actually, I like this one. AAL parabolic reversal. You had a new 2-minute low. Stop loss was literally 1 penny. I know that, and to be honest, having a stop loss 1 cent is not really scary or hard on AAL. I know some might say 1 cent, this is so tight, you might lose a lot or something like that, but not on AAL. AAL sometimes snap. I'm not sure about NCLH. DAL, some stocks like this, they don't move a lot. Look at this. You see even here on the side, 73, 72, 71, 70, right? 69, 68. Basically, it doesn't move a lot. The biggest candle right here is somewhere around what? 9, 10 cents. And it's not spiking, right? You could see it's sticking and it's moving. So having 1 cent stop loss is not that scary on AAL. It would be a little bit tight if you get it right on the low. But especially that it started going up. And after going up, it started going down. Then you take it to the short side. You see that it already retested the previous resistance. Now it's coming back down, having 1 cent stop. If you have a good entry, it's not tight. If you get your entry somewhere here in the middle and you decide to put your stop loss at 1 cent, most likely you are going to stop out because of the consolidation within the 1 minute candle. If you get a good entry, then that's fine. Now, you took 50% partial at 4R, then realized that you had sold instead of cover. Hotkey mistake. So you immediately covered the entire position and got 3.5 R out of it. You were mad at yourself, but the stock ended up reversing anyway. So yeah, this was really good. One right there. You're taking this thing for a parabolic reversal. It is extended from the 9-moving average in the 5-minute chart, somewhere around 20 cents right there. Getting it at 58 or 57. Stop loss 1 cent, right at 58. And I see right here, if you see right the guys there, here there is a short order. And I guess that was the hotkey mistake where he added it to his position instead of covering. And then ended up covering it all for 3.5 R. And look at this, guys. This is a really small move right there. It's 5 cents or 4 cents. But with good entry and good stop loss, even from small move, you can get decent amount of R's, 3.5, 4 R's, or even more if it moves more than that. So good job right there, Ivan. Hey Kalal, Andrew is trading live in the chat room every day. He's not doing recaps anymore, but he does explain his trades in the chat room. Hey Adrian. This right here, guys, looks like a good actually reversal, right? You see first bottom, you see wicks right here. These are showing you buying pressure, reversing to the 20 moving average on the 5-minute chart, previous resistance. Bouncing out Fed, making higher low, again selling, buying pressure, and a new high right here and right here. Those wouldn't have been bad entries to the long side, especially that we see that the slope of the moving averages started changing to the upside and cross was about to happen. This right here wasn't a bad entry as well to the long side. No, you did really well managing this one, Ivan. Let's see Lenny. So Lenny traded WGC, and I see that you got WGC from the RSI Extreme Scanner, I guess. I saw this one, but I didn't like it so much. Looking at the 5-minute chart and the 2-minute chart, yes, it's been so strong intraday, but it's not parabolic. You could just do it with this line, drawing it like this. you see that it's not going parabolic to the upside, it's slightly trending. Then there is daily level right here. It rejected it one time, started dropping down. I see that you saw it making sort of a double top of the second top lower than the first one. You took it to the short side, stop loss new 1 minute high. Not bad right there. Got you stopped out. Unfortunately, didn't work out. I would have been careful about this one because this thing looks like it started to edge. It wasn't parabolic. It started doing reverse U shape, I could say. I prefer taking parabolic reversals on stocks like this, not like this. But still, this was decent, not an A+. You had reasons to exit right there. Daily level, reversal candle right there, new low, double top with the second top lower than the first one. Your entry, tight stop loss, good stop loss, actually not a bad stop loss, and unfortunately it didn't work out for you. Rose, let's see what you traded. So Rose traded AMD. AMD has been so choppy today. I thought it will be interesting to trade today because of the action it did yesterday. Unfortunately, it wasn't that clear right there. So let's see what you wrote right there. You entered it once it crossed view up right here with the stop loss at the bottom of the body. So your stop loss was right here, I guess, right? 0.07, yeah. Okay, that's the first trade right here. Sorry about this. So you get into the long side once it broke view up. Your stop loss was right here at the low of the body. First partial, approximately 1 hour. 2 hour, and then exit the rest at break even. Then you are getting back in at view up with the stop loss 61.31. Again, somewhere at this level right here, and I see why you use this area right here. 10 cent. You got a bit scared when it went back down, so you sold 50% at break even. Wanted to sell 50% at 1 hour, but sold it all due to hotkey error right here. Now let's look first of all at bigger time frames, okay? AMD. Yesterday it was so strong. It's at all-time high. At the open, it's spiking up to 62.30, getting sold off, squeezing below view up, forming a nice 5-minute open range breakdown, selling off all the way to 60.70, and then right here it makes an engulfing pattern on the 5-minute chart, which is a bullish pattern. Right here it's still not a bullish because we're not sure what's going to happen after that, because on the next candle it could just simply not break the highs of the candles and it could get sold off, forming a bullish engulfing sandwich, which is a bearish pattern. You're having red, white, red. This is a bullish engulfing sandwich. On a new low, it's possible to take this thing to the short side. If this pattern fails, and when will this pattern fail? Once it breaks the highs, right? It will not engulf it. It will close bullish, which happened right here. Now this is decent. I like that. I'm not sure what happened in the price action before, but I see that it dropped at first. After breaking view up, it dropped down, did a higher low wave, came back up. You are taking it above view up. Stop loss really tight right there, and I think this stop loss was good. Why is that? If you look at those candles right here, guys, you see that the highs are right here. Okay, so it means once it's breaking view up, I wouldn't really take view up as indicator in this trade. I would take the 1-minute candles before as an indicator. You see that they were holding below view up, and now somewhere here or somewhere here, and now it's breaking the range. It's breaking view up. It's breaking the highs of those candles, and you are taking it to the high. Once we are taking something to the long side outside of the range, you could have a tight stop loss. In this case, a new 1-minute low. If you are getting in somewhere inside there, somewhere down here, it means you are still within the range, right? You are still within the range. Your stop loss shouldn't be a new 1-minute low. It should be the low of the range. So here, not bad entry. Good stop loss, nice partials, followed your rules, exited the rest at break even. Now look what's happening. It's dropping down again. It's coming back up. That's right here. This right here is this candle. Now it's making a new 5-minute high after a week, and I love it when stocks are first going down. So this was a red candle by that moment. This is scary, right? It's starting to engulf it. But buyers don't let it go down. They immediately get it bought back up, breaking this point right here. This is a good bullish pattern right here. You're taking it to the long side on a new 1 minute high. Stop loss 61.31. That's what I would have done. Sometimes I even tighten it and I use the low of the body when I see hammers or something like that. And then you just go for the risk to reward. Unfortunately, this got you scared out when it got sold back down. I wouldn't really be scared out of this week because it's a consolidation within 1 minute candle. A consolidation within 1 minute candle or a consolidation within the second 1 minute candle, if it goes a little bit down, comes back up, shouldn't be scary. This is how the market trades, right? You can't expect only upticks, 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 and upticks within the candle. It's ticking 1 tick up, 2 ticks down, maybe 3 ticks up, 4 ticks down until the candle closes the way it's closed. We can't expect it to just simply go up. Hotkey mistake where you exited, that's not bad. No problem, not your mistake right here. Your mistake kind of, but yeah, this happens to everyone, it's just a hotkey mistake. Other than that, your reading of the price action, your entries, they were all good. I like that. Your entry here was amazing. I love that you didn't go in there because here it started looking for me that it's forming a reverse ABCD pattern, right? It's forming a reverse ABCD pattern. Definitely, I'm not taking this reverse ABCD pattern because of the buying wicks, buying wicks, buying wicks. There are also selling wicks, but I see that it's a range and it could go anywhere. I would personally prefer waiting for it to decide where it wants to go. It did that here. And then take my entry, which you did right there. Good job, Rose. One second. Now let's go for the next trade there. Ralam, let's see what you did. So Ralam traded mRNA, ABCD pattern, bounce of the 20 moving average on the 1 minute chart. Now, as we usually do, we go from the bigger time frames, right? From the bigger time frames to the smaller. We want to see a setup on a bigger time frame. So you see mRNA, it's so bullish, it's going up all the way to the daily level. Out of the daily level, it starts selling off, starts getting pushed back down, selling pressure. Now, on the 5 minute chart, it's starting to pull back. It's extended from the 9 moving average on the 5 minute chart. For me, I wouldn't have liked this for an ABCD pattern on the 5 minute chart yet. Why is that? First of all, daily level, bounce out of it, strong move right there, parabolic, and I would expect it to pull back to the 9 moving average on the 5 minute chart or to view up, but at least it needs to pull back. And then I want to make sure it's holding the support. If it's view up or the 9 moving average on the 5 minute chart, I want to make sure that it's actually holding that level. Let me mute these guys. I want to make sure that it's actually holding this level as support, at least for 2-3 minutes with confirmation candles on the 1 minute chart. Once it does that, I will take it to the long side. But right here, I see that's making a new 5 minute low, right? Like right here, yes, there is no new 5 minute high, but I see that for 10 minutes, it's holding a level. If those candles right here were above view up, those two candles were here, I would see that for 5 minutes, it held above view up. For the next 5 minutes, it's still holding above view up. On the 1 minute chart, I'm having some confirmation. I could take it to the long side. But on the new way down, on a new 5 minute low, I wouldn't like it to for the long, at least here. Now let's go to the smaller time frames. There is nothing on the 2 minute chart. It's cut. On the 1 minute chart, you try to take it, sorry about this guys. You try to take it for an ABCD pattern. Maybe an ABCD pattern from here or from here, wherever you want to write it from. Anyway, AB, you see that it's holding the 20 moving average for 1 minute. Not even a new 1 minute high, right? No confirmation candle right there. Still making lower highs, and then you took it to the long side. This is the mistake, right? Now look at these guys right here. This is what I was telling you about. You see this? Here, you see that it's actually holding the 9 moving average on the 5 minute chart. It's holding it for 5 minutes. It's still holding it for a couple minutes more. Now, you either wait for the D, which is the new high for your entry, or wait for the W shape. And look at these guys. If you take it right here to the long side, it's not bad. W shape on an ABCD pattern, but it fails. I see that, and that happens. But the setup is good, right? Let's get back here. I'm talking too much about something irrelevant. Anyway, You see that it's holding the 9 and the 5. You see that it's holding it for 10 minutes. Now you go for a smaller time frame. You expect an ABCD pattern to be formed. You see a 40% pullback, which is good on ABCD pattern. 40 to 70% pullback is good on ABCD pattern. You see it's bouncing, going to the 9 moving average in the 5-minute chart. This is another plus point. Now you need to get an entry from smaller time frames as close as possible to the support, right? You see small double bottom right here. It's holding it, right? This level. You see a confirmation candle, which is a hammer. You get in as close as possible to the support. Put your stop loss below the bodies, never using the wicks, or you could use the wicks if you want. And in this case, if you get an entry right here and your stop loss is somewhere below the bodies, you could get 2 Rs even if the setup is not working. This is why we want to get entries as close as possible to the supports using smaller time frames when we see setups on bigger time frames, which is the 5-minute chart, for example. If you see a setup on the 5-minute chart and you get your entry also from the 5-minute chart, your stop loss will be big. And the risk to reward will be also bigger. If you will be smaller. If you get your entry here or here, that's your stop loss, or that's your stop loss, that's your risk. You need at least half the day for your reward. If you see a setup on the 5-minute chart, you see your entry on the 1-minute chart. After confirmation candle, you get your entry somewhere there, stop loss somewhere there. So you're entering in between the candle before it's making a new high, because you have your confirmation. You have most of the stuff you want to see in a bigger time frame. You see an ABCD pattern. You see 40% pullback. You see it holding the 9 moving average on the 5-minute chart. It's more strong than it's weak. You get the confirmation candle on the 1-minute chart. You don't really need a new 5-minute high in this case. It depends on how clear it looks like to me. Right here, I see it so clear. I see a lot of buying wicks, right? Buying wicks. It tried to form small reverse ABCD pattern on the 1-minute chart, which actually failed. And again, it's buying wicks, and it's breaking back up eventually, right? When I see this, combined with the 5-minute chart, I would use a little bit below the buys. And that's what I do most of the time. This doubles my risk. Instead of having this all as my risk and then this my reward, I could have this as my risk and this is my reward, and it will be way more. Sometimes I'll get stopped out because of my stop loss so tight, and I showed you on some of my trades before when we were reviewing my journal. Because of the really tight stop loss, sometimes I get wicked out, but then I re-enter. Sometimes it still works out, and if you are holding well with the really small loss, you are going to make up for those losses and more. So Mu'in, let's see what you did there. Traded Twitter, ABCD pattern on Twitter, right? Yeah, I'll get back to it. I'll review one trade for each one because we're having a lot of trades on the off topic. Once I get back through them all, if we have time, and I think we will have time looking at what we have there, I'll go through the second trade for everyone again. So let's see what you did, Mu'in. There is an ABCD pattern on Twitter. You're waiting for a new 5-minute high, taking it to the long side. I mean, right here it was a new 5-minute high, but this was a parabolic pullback, guys, right? If we see an ABCD pattern with a parabolic pullback, especially after 10 o'clock, I prefer seeing the W shape on the 5-minute chart. I would have entered it not here. I would have entered right here. I would have left this one because I could have been afraid that this is forming a lower high and maybe actually a reverse ABCD pattern, and then it might just go against me. My confirmation that that is not going to happen after a parabolic pullback is waiting for a W shape, and that's my entry right there, unless I'm seeing that it's holding a support. Not only for 5 minutes, sometimes I could take it on the first high as an exception if it's holding the support for multiple candles, 10-15 minutes. If it's dropping down, holding it for 5 minutes only, and then making a new high on the very next candle, that's when I'm a little bit cautious and when I don't want to rush the entry. If it's dropping down and then holding the support for 10 or 15 minutes and then making a new high. This is giving me more confidence because I see that this is actually a good support and it's been holding it for 15 minutes, 20 minutes, whatever it was holding it for. And then it's making a new high finally. So it was trying to break down for 15 minutes. It finally broke down a small descending triangle on the 1 minute chart, but this was a fake breakdown, immediately squeezing back up, closing as a hammer. Now you could try to the long here, but this is so risky. This is entry based on the 1 minute chart, on still lower lows and lower highs on the 5 minute chart, and only one confirmation candle. Right here, it's looking like it started making new lows and then coming back up, so this entry would have been way better. Little bit late, but I think there is no difference. Right, you could have taken it anywhere right here. So your entry right here was good. I like it. Stop loss for me would have been below the bodies. I wouldn't have used the wick. As usually, I use below the bodies in the 1 minute chart, which is also a new 5 minute low. If I am entering a little bit earlier, and then you are taking your partials all the way up based on your risk to reward. Amen. You will also enter on a new 1 minute high if there is a candle pattern. Yes, I will enter on a new 1 minute high if there is a candle pattern, and not only 1 minute. I need a little bit more confirmation. Like in this case, this 1 minute is not enough. I like that it was forming a descending triangle. I like that it broke down and got squeezed back up. It's showing me that this was a fake breakdown and the squeeze candle closed as a hammer, which is confirmation candle. This is not an A+ setup. It's a little bit of a risky play, but it would have been decent. Do we look at ABCD pattern on the 5 or the 1 minute chart or both? Anyway, if it's earlier on the day, the first 5-10 minutes, let's say, and you see that on the 1 minute chart it's breaking below, dropping down, pulling back, coming back down, I could take it based on the 1 minute chart on one condition. The ABCD pattern on the 1 minute chart should not make a huge move. Sometimes candle could make the stock could make 10 or 15 candles with higher highs and higher lows, maybe something like that. But anyway, then it's making a small pullback, 3 candles, and then a new high. So this is still the first 30 minutes, right? And this is an ABCD pattern on the 1 minute chart. But this ABCD pattern on the 1 minute chart is on a third consecutive 5 minute candle. The stock is already so extended. It's the third 5 minute candle on the way up. Yes, you're having an ABCD pattern somewhere on the top right here, but this is not a good ABCD pattern. If I see the ABCD pattern within here, like maybe within the same 5 minute candle, I could take it, or maximum with a breakout on the next 5 minute candle, I would take it. More than that, it's too much. After 10 o'clock, I look for ABCD patterns based on the 1 minute, on the 5 minute chart, with an entry based on the 1 minute chart, just to tighten the stop loss. You're welcome. So Sebastian, a lot of trades right there. AMD. Okay, let me take the headphones. They hurt my neck actually. 1 second. So AMD did an engulfing pattern right at the open. We saw this right there. Squeezing above view up. Now this I would have been careful because this is like the first candle, right? But still, this is not bad. One thing I don't like is this. It's so wide move. It could have just made a small pullback, got you wicked up, and then worked out. I see that it wicked down. Luckily, it didn't touch your stop loss, and you added to your position with good partials. But that would have been a little bit scary. This entry was good. This wasn't bad because you see that it tried to sell off on this candle. Let me get the pen to a yellow color. You see that it tried to engulf right here. It tried to go down, but it got bought back up on a new 5 minute high, which is the second candle. Remember what we said before? You get your entry either on the first candle, which is the best. If you can't catch it on the first candle, you could take it on the second consecutive candle. This is not the best, not A+, especially when it's on the top, but it's still good. Third consecutive candle is what you avoid. So we see that the entry was on the second candle. It's not the best, but it's still decent. This was a little bit risky for me because you see that it made a huge move. Right here, this is decent because you see it tried to sell off, got bought back up, made a new high. You are still within the second candle. you're adding to your position or taking it to the long side and then selling it all the way up. Then you are getting stopped out the remaining above the break even. This is another entry right here, I see, right? So this is now risky. See, now you are getting in on a third consecutive candle. This is what I wouldn't have done. This is already a huge move right there. I see that there is a pullback on the 1 minute chart, sort of an ABCD pattern on the 1 minute chart, but this is what we were talking about. This is an ABCD pattern on the 1 minute chart when the stock is so extended on the 5 minute chart. We are lucky that it did a fourth consecutive 5 minute candle, but a lot of times it's just doing 3 and then it's wicking down. 3, then it's wicking up, then 3, then it's wicking down, right? Sometimes it does those 4 candles, but we need to do or trade based on what's happening frequently, right? What I see is that more frequently stocks are doing 3 candles and then they are pulling back, 3 candles and then they are pulling back. Here we were lucky because it did 4 candles, but that doesn't happen so often, right? This is why I would have avoided this trade and this trade. Eventually they did work out nicely for you. I see you made money on that, which is good, but you see there are a lot of over trades. This shouldn't have been there. You're taking this thing to the long side on an engulfing candle, right? It was going up, it engulfed, it did a lower high and lower low on the 5 minute chart, and you are taking it to the long side on the way down. We need to avoid taking stuff on the way down. If this trade was here, it's still not the best, of course, but at least you are taking it on new 1 minute highs or on a new high instead of taking it on the way down. Yes, this would have failed as well, but it's better. I see this was short right here, right? Why did you take it to the short? This was short, right? Or you took this thing to the long eventually? Forgot to remove your stop loss. Okay, I see that. I see that. B-Tang, what did you do there? Thank you, Sebastian, for sharing that. So B-Tang traded AMD, and let's go again as we usually do from bigger time frames, right guys? On the daily chart, it's at all-time high. On the 15-minute chart, look at this, guys. It's clearly strong right there, but I would be scared because on the 15-minute chart, it's straightly going up and it's close to a round number, which is $61, and it is a daily level right there. So we missed most of the move, and now we are just trying to reach the beginning small move right there. I'm not sure if that's long or short. We'll see now what that was. Now let's see the 5-minute chart. 5-minute chart, 5-minute chart, 5-minute chart. On the 5-minute chart, I see it's clearly going up, extended from the 9 and the 5. I would definitely like it for a parabolic reversal. Actually, AMD was my 2 losers yesterday. This was yesterday? Yeah, it was yesterday. I tried to catch parabolic reversal on AMD yesterday twice, and twice it actually failed. Anyway, when I see this price action, the only direction I would want to take AMD to is to the short side. It's extended from the 9 and the 5. It's clearly going up. Look at this. It should make a pullback eventually, so I'm going to try to catch that pullback, and I failed at that yesterday. Or I would wait for it to pull back and then catch it for a trend continuation. Now let's see the smaller time frames. 2-minute chart. Now this was actually short, I see. You held on through this whole consolidation. There is a shooting star at the high of the day. You are taking it to the short side on a new low, and it actually worked out nicely right there. I'm not sure why did you exit right there, B-Tang. I don't think it got you stopped out because the best stop loss here is the tightest stop loss is below the body, half of the wick, or the safest above the wick. What I would do is just a couple of cents above the body, and I see it would have given you at least a little bit risk to reward. I'm not sure why you exited. I can't see what happened after that. Yeah, you see guys, this actually worked out decently, not perfectly, but it did work out. A little bit of a late entry right there. Better if you caught it right at the low. I can't see if it got you stopped out right there eventually or not, but this was a good trade. It was a good entry. Capped stock, let's see your NKLA, traded ABCD pattern, type A. And for those who don't know what's an ABCD pattern type A, it's a stock which is going to one direction parabolically. Then it's not pulling back, it's getting so extended from the 9 and the 5, but it decides to consolidate all the way till it either gets closer to the 9 and the 5, best if it touches the 9 and the 5, and then it continues the trend direction. It needs to rest after a huge move. Sometimes stocks pull back, and this is the place where we catch parabolic reversals for a pullback to the 9 and the 5. Sometimes they decide to just go sideways with no pullback and then bounce off the 9 and the 5, and this is the price action which we don't want to get stuck at. Sometimes they never reverse, right? Sometimes they just go sideways and then continue the trend. We don't want to force a reversal in this place. If it's not reversing, it's failing multiple times and still goes sideways, just avoid it or avoid catching a reversal on it. Now NKLA, you see it drop down so much, right? It got extended from the 9 and the 5, and what's happening right here? It's consolidating. It's going sideways with no pullback. Still it got closer to the 9 moving average on the 5-minute chart. On the 1-minute chart, you see waves, lower high, lower high, lower high. So it's forming a descending triangle on the 1-minute chart. Now this is what happened. What did he do? He saw a setup on the 5-minute chart, a reverse ABCD pattern, and got his entry based on the 1-minute chart. Stop loss, the high of the previous wave. If you look only at the 5-minute chart, you could put your stop loss right there, but safer to put it at the C level or somewhere right there. But looking at the 1-minute chart and looking at the waves, it would be safe to use the previous wave, or safer of course, and this is what I would have done, to use the one before that. This was the stop loss, and then took partials all the way down. I would have left a little bit more because it's expectable that after stocks break a support area on a descending triangle, for example, and after a huge move, it could make a pullback to the previous support, act as a resistance, and then continue the trend. Sometimes it doesn't even make it to the previous support, maybe a little bit below that, which it did right here, and forms another reverse ABCD pattern and continues the trend. It's always good to leave at least 10% or 5% of your position to practice holding on to your winners. Something I'm also working on right now. Just an advice for the future, but this was a really good trade. ADG, let's see what you did there. mRNA. Now on the weekly, it looks so strong right there. Today it gapped down, or not today, maybe in the previous days, because this is a weekly. On the 5-minute chart, I see that it's holding below most of the moving averages and below VWAP. Looking at this, I'm going to be short bias. I'll be long bias once it squeezes above this point right here, above the high of the day, above this point right here, above VWAP, but I want to see it closing above the range. Otherwise, I would try to take it to the short direction I would take it with the direction inside the range with a stop loss at the highs right here. I wouldn't try to catch it to the long side within the range, because for me, looking at the 5-minute chart, it's more weak than it's strong. Now let's see the 15-minute chart. Same thing on the 15-minute chart. Stock is clearly down trending right there. No long bias right there. The 1-minute chart, look at this. This is what we try to avoid. You got into the long side hoping that it will break after a huge move right into the face of resistance. This is what we try to avoid. Buy high, sell low. Luckily you didn't sell low. You saw that break even when you saw that it was actually holding it, so it was smart of you to exit. But remember, if you want to get in to break out, we want to see tighter range. There were already people who got into the long side anywhere right there. And looking at the bigger time frames, we see that there is a resistance right here. So those people who got in earlier will be selling it right here, and you're buying their shares, right? Those people who got in, selling to the resistance, and you're getting in to the resistance. To get into a breakout, it's better to see stock racing. you see it going up, it's pulling back, going up, pulling back, trying for a breakout, getting tighter. In this case, you could go into the face of the resistance because you see that every time it's making higher low, it's getting tighter in range. Every time it's getting bought earlier than the previous time. So it got bought here the first time. The second time it got bought right there. Third time it's getting bought right there. Buyers don't let it go down. They're pushing it every time higher and higher and higher for a breakout. In this case, you could go against the resistance. But on the first wave, like here, you can't expect it to make all this move and then also break up. It needs to get some rest before a breakout. Still, good job noticing that, realizing your mistake, and exiting at break even. That was really smart of you. Okay, now let's see MIG. So MIG traded PFE. And again, guys, remember, we go from bigger time frames to smaller time frames, right? 15-minute chart, it was holding above view up, holding above the 20 moving average. It broke the range right there. And then on the next candle after breaking the range from the daily level, it got engulfed and it did a new 15-minute low. On the 15-minute chart, we're having a daily level right there and a moving average right there, which could act as a support, right? Looking at this, it's weak right now because it broke it, and I'm definitely going to be short bias on this thing once it breaks this area. Now, the 5-minute chart, 1, 2, 3, right? 3 consecutive candles. When I see 3 consecutive candles, I expect that the stock will do a pullback, especially if those candles are big and extended. Now, definitely not taking it to the short side. 1, 2, 3, right? Definitely not taking it to the short side because I see that it has small probability of working out after the third candle. If there is a setup which is telling me that this thing might go to the long side, I will try to take it to the long side. If there is nothing telling me that this thing might go to the long side, I will avoid it and let it do whatever it does and wait for an opportunity to take this trade. Now, on the 5-minute chart, we're having a level here. On the 15-minute chart, we see, on the 5-minute chart, you see it bounce of 38.80. And what is this 38.80 level? It's the 50 moving average on the 15-minute chart. Now, this is what we saw on the 5 and the 15-minute chart. Let's go to the 2-minute chart. What do we see? A stock making a reverse ABCD pattern, dropping it down, bouncing off the 50 SMA on the 15-minute chart, right? Closing as a reversal candle on the 2-minute chart. It's parabolic. We saw it's extended from the 9-moving average in the 5-minute chart. You could take it to the long side on your new 2-minute high here or here. And this is the reward. Really good job, Mick, right there. You see, this is how we try to read all the time frames together. You go through bigger time frames, try to determine what directions you could take the trades to. Then you go through smaller time frames to get your entries. Now, Nawig, let's see what you trade there. Okay, moving average trade or ABCD pattern right there. So I can't see the 5-minute chart, and I really prefer seeing the 5-minute chart for the bigger time frames first, right? We get the entries from smaller time frames. Anyway, we see that there is an accumulation phase right there. It's not making a huge move. It's clearly going up, clearly uptrending slowly, right? It's not going parabolically. This is a accumulation phase. Now it's starting to get volume to the upside. This is the beginning of the move. You are catching it to the long side. A little bit late, I would have tried to get in here or on the next candle because you actually get in on the next candle, which had volume. On the top of it, unfortunately, but still was good. Added more, I wouldn't have added. And then early partials, right? Remember, when you take it to the long side here, I would have put my stop loss at least below those 3 candles right here. Or down there. I think this was where I would have put my stop loss at. And I wouldn't, maybe the new 1-minute low maximum. After the add, I will not put my stop loss at a new 1-minute low because it could just wick to the 9 and then continue the trend. And that happened right here. This, which happened right here, could have happened right here. Go to the 9, get you stopped out because of new 1-minute low, and then continue the trend. you're lucky it didn't happen, but this happens. This is why we don't use new 1 minute lows as stop losses, because price could do some waves right there. We don't want to force it or to get stopped out on a good trade. That's why we're having technical stop losses. Now you're taking some partials. Again, you're adding on the way up. Remember, adds should be after pullback. So it's going up, it's pulling back on a new high. After a pullback, this is where you want to add to your position, not on the way down. Going up, pulling back, this is where you want to add to your position, not on the way up, right? Now look at this. It went up, pull back, went up, pull back. So the previous resistance acted as support. Adding right here is not bad. Adding right here is not bad. Now it's going up, it's pulling back. What's happening right here, guys? Getting back into the range, right? We don't like it when stocks are getting back into the range. It's actually here, it didn't get back into the range, so this ad is not bad. Here I see that it's getting back into the range, so I would have avoided this ad right here because it could have just simply made a lower high and dropped down. As long as it's not getting back into the range, ads are not bad. I mean, after pullbacks, right? So this is, let me get it back. Oh my god, this is horrible. This is the first time. This is the second time. And as long as it's not getting back into the range after a pullback and the previous resistance is acting as support, it's not a bad place to add. It's not a bad place to add. But after it's getting back into the range, I would be worried that it could make a lower high and drop down. So I would have avoided this ad right here. And then again, one more time, it's getting back into the range, right? It's breaking up. Previous resistance is not acting as support. It's getting back into the range. You see, you're adding to your position, but it eventually drops down. As long as the previous resistance is acting as support, it's not bad to add. But once it gets back into the range, be cautious about adding. Nice trend you caught there still. Ken, let's see what you did there. Let me get this up again. So Ken traded MU, 5-minute chart. What do we have? Stock extended from the 9-moving average on the 5-minute chart. 3 consecutive 5-minute candles. When I see that, I try to watch smaller time frames for a parabolic reversal. If they give me that, I will take it to the short side. If they don't, let them go. What do we have on the 2-minute chart? A reversal candle at the top. 2 dojis right there. You're taking it to the short side, and I see that you're getting stopped out. Shorted one more time, and you got stopped out. Not bad, to be honest. Didn't work out only. This was really strong. I see that it worked out eventually after that. Not on this candle, but this wasn't a bad attempt. You saw it extended from the 9 to 5. You saw reversal candles on the 1-minute chart. We tried to catch it for a parabolic reversal, and it just didn't work out. As long as you guys control your risk to reward and you don't let the losers run and keep your winners run, eventually you will be consistent and you'll be profitable. Now let's see run. On the 5-minute chart, there is a reversal candle after hammer bouncing off a daily level. That's really good to see. You are taking it to the short side on a new. Now look at this. If you are taking something based on the 5-minute chart, your stop loss should be based on the 5-minute chart. If you are taking it based on the 1-minute chart, your stop loss based on the 1-minute chart. Now remember, if you catch it here, you could use your stop loss at a new 1-minute high. If you get in here, you can't put your stop loss at a new 1-minute high. Your stop loss is still the same level because it could just make a lower high and drop down. If you get it here, you can't put your stop loss at a new 1-minute high or a new 1-minute high. It's still right here. If you get it here, still your stop loss is here. Now, if you get it there, your stop loss could be at the high of the week or a little bit above the body. Why is that? Because this is another wave forming right now. So any entry on those candles means that your stop loss should still be the high of the previous wave. Once it's forming another wave, you could put your stop loss at the high of the body or at the high of the wave. Once it's forming another wave, you could put, and you are getting your entry, you could put your stop loss at the high of the week or a little bit above the body. So this trade right here, it was good. I see it on the 5-minute chart, I see it on the 1-minute chart. The bad thing here was the stop loss. It was so tight. And it did eventually work out. And we don't want the good trades which we analyze really well and which work to run without us. Because this time it worked out and we get stopped out only because our stop loss was tight. Next time you are going to get a trade which is separate. Every trade is independent, right? And you are going to put a good technical stop loss on it, and it will go without you, and it will also be a loser. So you will have 2 loser trades, one of which was supposed to be at least 3R winner. This is what we don't want to catch or to get into. Okay, now let's see Daniel. Daniel traded in CLH. On the daily chart, we see it actually gapped down, right? So not gap down, it's on a downtrend, maybe gap down slightly, but still it's weak on the daily chart, slightly short biased. 15-minute chart broke the pre-market level to the downside, and it's pulling back, still short, right? Not telling us that this could be a long. On the 5-minute chart, we see it drop down, pull back, closed as an indecision candle, and we see the daily chart is weak, 15-minute chart is weak, 5-minute chart we're having an indecision candle and it's making a new 5-minute low. You are taking it to the short side on a new 5-minute low. On the 2-minute chart, same thing, dropping down, pulling back, selling pressure, new 2-minute low where you are taking it to the short side. On the 1-minute chart, same thing, dropping down, pulling back, holding this level for a few times, holding this right for a few times, making a new low, you are taking it to the short side. Stop loss a little bit above the bodies or the high of the wicks, wherever you want to put it. It's dropping down, pulling back, you are adding to your position, and you are moving your stop loss to the next wave. It's never getting you stopped out, but you decide to exit because of the higher lows. Now, I'm not sure if you noticed this or you didn't notice it. Along with the higher lows, it was forming lower highs, right? So basically, it was forming a pennant right there. I know that when we are in it, before we are taking a trade, we try to think of as many reasons as we can to catch a trade, to get into a trade. Once we are in a trade and we see it's going against us, we only see the reasons which are telling us to bail on the trade. Yes, you see higher lows, but there are also lower highs right there. And all the bigger time frames are telling you that this thing is actually a weak. And remember, as long as it's a reverse ABCD pattern and as long as it's still below the 9 moving average in the 5-minute chart, the setup is still valid. The next thing, this was a parabolic pullback right here. It wasn't simply just a small pullback. And remember what? After a parabolic pullback, what is the best place to enter trade? On an M shape. You got a really good entry, an early entry, but an M shape formation is still to be expected. So a new high on the 5-minute chart should not scare you because it is normal to see that after a parabolic pullback, an M shape right there. So the best entry right here would have been after you see the M shape and after a confirmation candle. Maybe right here somewhere. Not sure if it worked out or no, but that's the setup right here. Other than that, the trade was really good. T chart. Again, let's go back from bigger time frames, right? 15-minute chart, really bullish. Above all the moving averages, above view up, above the 9 moving average. What I do from the 15-minute chart, only try to determine the direction of the trend and see the supports and resistances and the moving averages. I see a daily level on the 15-minute chart at 53.40 right there. It's a strong move on the 15-minute chart. Now we're going to the 5-minute chart. On the 5-minute chart, we see a stock which is extended from the 9 and the 5. Definitely not taking it to the long side because it's 1, 2, 3, 4, 5 consecutive candles right there, right? So now we're going to watch the smaller time frames and try to catch a reversal on it, or we're waiting for a pullback to the 9 moving average on the 5-minute chart to catch an ABCD pattern out of it. What T chart is doing, he sees selling pressure right here, engulfing candle right here, which is forming a shooting star on the 2-minute chart. taking it to the short side on the 2-minute chart, and this is a good parabolic reversal. The second trade, now it's pulling back and he's exiting the rest at break even, and he's entering to the long side a little bit late, but this is like the second consecutive candle late, not an A plus but decent, and this is set up a breakout of the high of the day, taking it to the long side. And on a setup of a breakout of the high of the day, you could use only a new 1-minute low as your stop loss, partialing all the way up, and now you are taking a reversal one more time. It's getting extended from the 9 and the 5. 1, 2, 3 candles. Wait for an entry based on the 1 or on the 2-minute chart. Unfortunately, I can't see a good... Actually, I see this is a reversal here, but we never had a new 2-minute low for an entry, right? This is the reversal candle, which we look for, but there is never a new 1-minute low, so I would have avoided this trade right here. Then you see that the previous resistance is acting as a support. Remember, guys, as long as the previous resistance is acting as a support, and this is also an ABCD pattern, this is a good setup to try to the long side. Entry after a confirmation candle. I wouldn't have taken it on the way down. This is actually a confirmation candle for you. 1-minute hammer. I bet this was your stop loss, because of which you didn't get subbed out on this week right here, and you sell it all the way up. Really good trades there, T-chart. Yeah, that was amazing. You got it to every possible direction. Now, let's see what Valentin did. Valentin traded Twitter. We have the 5-minute chart and the 1-minute chart. The 5-minute chart is a little bit choppy. I don't really like it. You see here, it opened up bullish, then it's selling off, then it doji, which is an indecision candle, and a new 5-minute high. Looking at this, a little bit long biased, right? It was strong. In the pre-market, it was weak. Got into a daily level, squeezed all the way up. Selling pressure, indecision candle. After the indecision candle, buyers won. They didn't get it back to the low of the day. They get it squeezed back above view up. Now, this is what we see on the 5-minute chart. We can't take it only based on the 5-minute chart, because we still have selling pressure wicks right there. On the 1-minute chart, what did we see right there? Or what do we see? We see higher low waves. Every time we're having a higher low wave. Actually, there is sort of a pennant also forming right there. And then we're having multiple confirmation candles. Bullish candle, hammer, another hammer, a new 1-minute high, which was the entry. Now, this was really good reading of price action. This is actually something I didn't see, but you saw. There is an ascending triangle on the 1-minute chart confirming the bullish pattern we see on the 5-minute chart. Right after it's breaking this ascending triangle right here, you are taking it to the long side and then selling it at the peak. This was amazing. I love when this happens. Not sure how you caught it, but this was really good. Partial right there. I wouldn't have exited here though. Look what's happening there. It's going up, it's dropping down into the previous resistance area and getting bought back up. And you are selling the rest on the new high. If you had panicked a little bit and you sold on this candle right here, I would understand it. But here you see that the price is actually starting to go into your direction. It's starting to make new highs. Okay, that was hotkey mistake. No, okay, now that's fine, that's fine. And this wouldn't have been a bad place to actually buy. So yeah, this is fine. Now look what's happening right there. Previous resistance, breaking up, and it's getting back into range. This is where we don't add, right? It's breaking up, and after a breakout, if the previous resistance isn't acting as support, we try to avoid it. Now it's coming back down into the range, and this is actually sort of a head and shoulder pattern, a weak pattern. This place I wouldn't have actually thought about adding it. What's an ascending triangle? An ascending triangle is a bullish pattern. It's a triangle, but you have a flat resistance area and an ascending part below it. What's happening there is the price action starting to make higher low waves against a flat resistance. If you see 3 touches to the downside, 3 touches to the upside, most of the time this is enough for a breakout, your entry is either as close as possible to the support on a third touch, somewhere in between with the stop loss at the low right there, or right at the breakout with the stop loss a new 1 minute low. That is the ascending triangle pattern. Same thing for the descending triangle, but it's the other way around. See the price action getting tighter and tighter and tighter in range until it's trying to break out. What's the direction of the breakout? You see the sellers are pushing it every time down. Buyers are trying to push it up, but the only thing they can do is hold it at the same level. They can't push it back up until it just eventually drops down and all the buyers get stopped out. Ash, let's see what you did. Traded Microsoft, same thing. This looks like parabolic reversal. So extended from the 9 moving average on the 5 minute chart. 4 consecutive candles on the 5 minute chart. Now on the 1 minute chart, what do we see? A new 1 minute low. Now look at this. What's the stop loss? The high of the bodies. Not within the 1 minute candle. The high of the body would have worked out. But I see that you re-entered, which was really smart. A little bit early partials, but not problem. And this was, yeah, this is what I really regret doing. Remember, when the stock is dropping down, it's expected that it's going to trade in waves. It could make a higher low wave and then continue the drop down. So new highs on the 1 minute chart, as long as it's making lower lows and lower highs on the 5 minute chart, shouldn't scare you. If it's making a new 5 minute high, maybe then you should be a little bit concerned that it might reverse. Though a new high on the 5 minute chart after this huge move doesn't mean a lot, because it could just simply make a reverse ABCD pattern. But don't be scared of how the 1 minute chart candles look like when you're having a successful move on the 5 minute chart. Zephod, the scanner is pretty precise. It looks for something to be 2% extended from the 9 on the 1 minute chart, from the 2 on the from the 9 on the 2 minute chart, from the 9 on the 5 minute chart. It looks for a heartbeat. It looks for an increasing volume. It looks for a lot of criterias, and because of which it makes so little calls within the day. It has a lot of criterias in it. They are consistent, but so many criterias. You still can watch the up extended and the down extended, or the new high bid or ask scanner, and search for something extended and try to get an entry out of that, because the scanner is not calling all the trades. It's so precise. I'm reworking on it so that it makes more calls, but unfortunately it's not so consistent with the new criterias. Saddaf, let's see your love trade. Can't see the 5 minute chart. Oh no, I see it actually. I see it all the charts. Daily chart, gap down. 30 minute chart, new 30 minute high. This is showing me a bullish pattern. 15 minute chart, new high, bullish pattern. 5 minute chart, double bottom, bullish pattern. I would have entered somewhere there or there just for confirmation. I see that it's breaking this area right here after a pullback, starting to form a bearish engulfing sandwich, and you got at the low when you saw it was not holding after confirmation candles. Stop loss at the lows, and this was really good reward. You held it on amazingly. So we see it bullish on all the time frames. I would have definitely liked a little bit of an earlier entry somewhere when it started breaking these areas right here. I see you didn't want to do that. You wanted to break, to pull back, to give you confirmation, and then an entry. What I would have been a little bit concerned about is that this area would act as a resistance and it will drop down. But with your early entry, if it did that, you will be able to exit at break even. Good one. Heartbeat, I don't think I'll have time to explain it right now. You can Google it, Heartbeat TI scanner, or I'll explain it when I'm in the chat room, okay? Now let's see JPM. This is only the 5-minute chart. We see that it's dropping down. Now it's starting to struggle at this area. It can't go lower. Sort of a reverse head and shoulders pattern. This is the first wave. Actually, there is another wave, another wave, another wave, but they are making higher low waves, which is something good to see. You see it's getting both all the way up on those weeks. So you get an entry at 98.20, and then you're starting partials all the way up. I really love the early entry, 98.20. This was a really good entry, early entry with a good stop loss, and that was a good reward for the first partial. Yes, you got stopped out multiple times right there, but holding on to your winner definitely made it all back. That was amazing. And the last trade we have is for Paul. Paul, what did you do there? Traded Twitter. I prefer looking at multiple time frames, guys, because the 1-minute chart is not really precise, but still, let's see what we can see there. 950. You're getting to the long side above view up, I assume. Yeah, there are a lot of entries, right? You're getting to the long side, stops out, long stop, long stop. Basically, there is a little bit of chop right there. If you are getting into the long side here, your stop loss at least here. If you are getting in after this wave right here, let me get it in yellow color. After this wave right here, then you could put your stop loss the next wave. You can't get into the long side and put your stop loss anyway, view up or anywhere here in this range, because stock didn't do a wave yet. This is your technical stop loss at this moment, or half candle is your technical stop loss. Now it's going up, you are taking partials on your winner, which is good. You are adding on an ABCD pattern on the 1-minute chart. And again, look at this, so many ads and early partials. Make sure I was only stopped out on one ad. The original entry was kept. Okay, so you get into the long side, added, and you get stopped on your ad. You took your partials. This ad right here is not bad because it's an ABCD pattern. Then you are seeing another ABCD pattern for which you are adding. Don't try to be on every move right there, because this is already a huge move right there, right? I mean, not bad. You are still entering after a breakout, and you see that the previous resistance kind of acting as support. There are multiple confirmation candles right there where you are taking it to the long side. But now on this area, it did the same thing, right? It drops down. It's getting back into the range. We avoid this ad. Again, it's dropping down. It's in the range now. You should avoid the ads. It's in the range. The trend actually changed right there. You shouldn't try to force it on to the way up or on the way up. There is sort of head and shoulders pattern, which is a reversal pattern. And now right here, it's breaking this pattern, which is the head and shoulders. Now here you could add. Here you could add or try to enter on it. And now the trend is getting back established. Too many ads right there. Better to get in on a good entry with a good technical stop loss and hold on to the winner. I see that this works for you, which is great. How many ads did you get out in this trade? This was a short. No, it was a long right there. There was some ads. 15R? Okay, good job. I see that this actually works for you, and as long as it's working for you, keep doing it. Dan, did you already review your trades for today? No, Dan, because I didn't do any. The scanners was quiet. I actually see that the scanner called BCOVAL. I'll take a look at them now and see what they did. Hopefully I'll take a trades after. But for today, I'm at break even still. So yeah, that's it for today, guys. We're actually out of time. We're trying to keep it at an hour. Thor is now on the chat room. If you guys still have any questions, make sure to email me ayman@beerbultraders.com. Next trade review session, we'll have it at Tuesday, 12 p.m. Eastern. I'll talk to you then. Guys on YouTube, if you have any questions, feel free to email me as well at ayman@beerbultraders.com. Have a good day, everyone. Don't overtrade and be patient waiting for your setup. Bye-bye.